This is Margin Machine, where we follow the money behind AI. Every single day, a company most people have never heard of processes more than 40 trillion tokens, the tiny fragments of text that every AI model reads and writes. That is one of the largest volumes of AI traffic on the planet, and it happens completely invisibly. The company is called Fireworks AI. In mid-July it closed a $1.5 billion Series D at a $17.5 billion valuation, and according to the company it has just crossed $1 billion in annualized revenue run rate, roughly 5 times what it was doing a year ago. But the most interesting part is not the numbers. It is the business model. Because Fireworks does not build frontier models. It does not sell a chatbot. It sells something far more boring, and potentially far more profitable. It runs other people's AI, faster and cheaper than they can run it themselves. By the end of this video, you will understand where the real money in AI is quietly flowing, and why the biggest names might be on the wrong side of it. To understand Fireworks, you need to understand a split that most AI coverage completely ignores. There are 2 economies in artificial intelligence. The first is training, the headline-grabbing, multi-billion-dollar race to build ever bigger models. That is where OpenAI, Anthropic and Google burn oceans of cash. The second economy is inference, actually running those models every time someone asks a question, generates an image caption, or autocompletes a line of code. Training happens once. Inference happens billions of times a day, forever. And here is the twist, in 2026, the money started rotating hard from training into inference. Investors poured capital into the companies that serve AI, not the ones that invent it. Think of it like the early oil industry. Everyone romanticizes the wildcatters drilling for crude. But some of the most durable fortunes were built by the people who owned the pipelines and refineries. Fireworks is a refinery. Every token that flows through its servers generates a tiny sliver of revenue. 40 trillion slivers a day starts to add up. But who actually builds a company like this? That story starts inside Meta. Fireworks was founded in 2022 by Lin Xiao, an engineer who spent years at Meta leading the team behind PyTorch, the open-source framework that became the backbone of modern AI development. Most of the AI models you have ever interacted with were likely built, at some point, on tools her team shipped. That matters, because it gave her something no pitch deck can fake. She and her founding team had already run AI infrastructure at a scale that almost no one else on Earth had touched. Inside Meta, her team served AI workloads for billions of users. When she left to start Fireworks, the insight was simple and slightly contrarian. The world did not need another giant model. It needed a way to run existing models, especially open-source ones, at production speed and production cost. While the industry obsessed over which lab had the smartest model, Fireworks bet that businesses would eventually care about a much less glamorous question: what does each answer cost me? That bet looked modest in 2022. In 2026, it looks like one of the sharpest reads of the entire AI cycle. And the way they monetized it is where this gets really interesting. Here is the Fireworks business model in one sentence: take powerful open-source models, tune them and optimize them until they run dramatically faster and cheaper, then charge customers per token, essentially selling intelligence by the gram. Companies plug into the Fireworks platform, pick from hundreds of open models, fine-tune them on their own data, and pay for exactly what they use. No $100 million training run. No research lab. The pitch to customers is brutal in its simplicity: why pay premium prices to a frontier lab for a giant general-purpose model, when a smaller, specialized model can do your specific task at a fraction of the cost? Fireworks calls this specialized intelligence, and it lines up with the broader shift of 2026. The industry has stopped asking how big a model is and started asking how well it completes real tasks per dollar. There is also a compounding effect hiding in this model. Every optimization Fireworks engineers make, every trick that squeezes more tokens out of the same NVIDIA chip, drops straight to the margin on every one of those 40 trillion daily tokens. Software improvements become money at a scale that is honestly hard to picture. So what do the actual numbers look like? Let us follow the money. In July 2026, Fireworks announced a Series D of just over $1.5 billion at a $17.5 billion post-money valuation. The round was led by Atreides Management, Index Ventures and TCV, with a supporting cast that tells its own story: Lightspeed, Bessemer, Menlo Ventures, and NVIDIA itself. According to the company, annualized revenue run rate has passed $1 billion, up roughly 5 times year over year. Daily token volume nearly tripled over the same stretch, from about 15 trillion to more than 40 trillion tokens served every single day. Now put that valuation in context. 17.5 billion is roughly 17 times reported forward revenue, expensive by normal software standards, but modest compared to frontier labs that trade at far wilder multiples while losing billions. And Fireworks was not alone. Within weeks of its round, rival infrastructure players raised comparable war chests, with Baseten pulling in a reported 1.5 billion of its own. Investors were not picking a winner. They were funding an entire category, all at once, at maximum speed. Which brings us to the uncomfortable question underneath all this euphoria. But here is the part nobody mentions. Selling tokens is a commodity business wearing a growth stock costume. Fireworks, Together AI, Baseten, and the cloud giants are all fundamentally selling the same thing: cheap, fast access to models they did not create. And commodity markets have one iron law: price wars. The cost of inference has been collapsing across the industry, in some cases by orders of magnitude within a couple of years. Great for customers. Terrifying for anyone whose revenue is priced per token, because your customers expect every efficiency gain to show up as a discount. Grow volume 5x, cut prices in half, and your revenue math gets complicated fast. Then there is the NVIDIA question. NVIDIA invested in Fireworks, and in several of its direct competitors. The arms dealer is funding every side of the war, which is brilliant for NVIDIA and worth thinking hard about for everyone else. And looming over all of it, the frontier labs themselves keep cutting prices on their own models, squeezing the independent inference layer from above. Fireworks is betting that specialized models and raw engineering keep it ahead of the curve. History says infrastructure price wars usually end with 2 or 3 survivors, and a graveyard. So here is the payoff. The AI gold rush has entered its second act. Act 1 rewarded whoever built the smartest model. Act 2 rewards whoever delivers intelligence at the lowest cost per task, and that is a game of pipelines, refineries and margins, not magic. Fireworks AI turned that unglamorous idea into a reported $1 billion of run rate revenue and a $17.5 billion valuation in about 4 years, led by a founder who understood the plumbing of AI better than almost anyone alive. Whether it becomes the standard oil of tokens or just another casualty of the price war will depend on one number: how much margin survives when intelligence becomes as cheap as electricity. That is the number this channel exists to watch. If you enjoy following the money instead of the hype, subscribe. It genuinely helps the channel, and this story is moving fast. Because there is a twist we could not fit in this video, one of the biggest AI companies in the world is quietly losing this exact price war right now, and its latest numbers reveal exactly how much it is bleeding. If you want to know which giant it is and what those numbers show, click the video on your screen right now.